Today I'll share with you my tips on how to trade when I'm really busy, what things I follow, what strategy I trade really when I'm busy and I don't have time to look at the chart. I want to do things like really quickly in the morning and I have to go outside for the day. I want to check the chart the other day. This will help a lot. We'll go through a couple of things you can do on how to actually make this kind of trading style better. Then I'll show you an example of trades on the chart and we'll go right into it. Before I forget, I'll leave below a free training I have on my Bonjour Reversal strategy. It's a strategy I trade still today. I started trading it maybe 8 years back and it's been really profitable for me so far. I use it to catch reversals in the market, kind of pinpoint areas where the market likes to reverse and then ride the reversals to a pretty decent reward to risk. That course, link below, will cover everything that you need to know about it, all the rules and details. I don't leave anything to chance. You will know the whole strategy from scratch totally for free. So pause the video, grab the course and jump right back in the video and we'll go through the charts here. Okay, so first thing you gotta do is really pick a time frame that you can rely on, that you can follow and execute consistently. I hear people who say that because they don't have enough time, they'll go today trade the daily chart, tomorrow they'll go trade the 5-minute chart, next day they'll be like in between somewhere. And it's very hard to go between time frames because you get used to a specific time frame. The more time you spend on one time frame, the better you become at it. And the more you're able to spot patterns and the more kind of in the routine you get also with this kind of trading time frame. If you're always switching back and forth within time frame based on your time availability, then your results will not be consistent. Your results will be varying from one thing to the next and you have trouble to kind of keep up. So stick to one time frame. I like daily charts myself. I can go in weekly charts too. I use weekly charts a lot in my trading, but daily charts will be my sweet spot of active trading versus kind of still being not too involved in the market. Weekly charts are a whole different story. You're kind of really outside of the game. You're not really looking at the chart on a day-to-day basis. You look at it at the end of the week. And that can be tough for some people. So daily chart works well, but you can pick the time frame you want. There's many possibilities here. Second thing to understand here is that the higher the time frame is, the more reliable setups tend to be. Like if you compare a setup on a 5-minute chart to a daily chart, on a 5-minute chart, the win rate will be a lot lower. There's going to be a lot more fail setup because it's just a small move. Anything can happen in like 5 minutes. Compare this to like on a weekly chart where you have setups that will be really forming for a whole week. You have the whole price action coming together. It takes time to form these setups. And as a result, these setups will be a lot more reliable. So you gotta take that into account, but not just in terms of win rate, but also in terms of risk. Because if you are trading a higher time frame, the risk should be a little bit higher. That's because you are taking more reliable setups if you do things right. If you're of course like over trading and you're kind of gambling, then it doesn't matter. Don't add more risk. But if you are doing things right, you follow a plan, then you'll see there's a lot more reliability on the higher time frames. Daily chart, weekly charts work better than these lower time frames. Doesn't mean you have to go at the extreme, but if you, let's say, were to risk a 2 or 3% per trade on the daily chart, then maybe adjust this back down to a 1% on the 1-hour chart or a 0.5% if you trade intraday. Risk is very personal, so make your own scale based on what you understand, what you believe in. Always try to look at having a lower risk in the beginning, increasing it over time if you have to, but it's better to start lower than higher for sure with risk. Traders who are beginners they actually think that the way you make money trading is you catch more trades. Like you catch this trade, that trade, you look at many instruments, many securities or many assets. You look at Forex, stocks, ETFs, and all that stuff combined together. If you want some you trade options too, and you can add this in. But that's a very high risk way to do things because you're really looking at multiple instruments. You're making your portfolio broader and you're kind of really making it hard to spot all the right trades at the right moment because you have to go through all these instruments, all these tools at the same time. And I think there's a better way to do it. Personally, what I do is I focus on a very few key instruments. I have a watch list of maybe 30 instruments that I look at on a daily basis. But what I do is I don't just kind of go and find other trades in other instrument. I actually scale into my trades more. If you have a trade open, let's say on whatever stock is here, let's say on Netflix, and you go and you then take a trade on Chipotle or whatever that is, then what you're doing is you're adding more risk in a different instrument. While if you have a trade on Netflix that's going well, you could just scale into it, add more size to it. And that means that your full profit is locked in. The profit you had before is kind of in place, it's locked in. You cannot lose it. You might move your stop loss to break even or above that. And then you add size to it so that this trade is already working out in your favor. You have another setup, let's say a pullback. You add more size to it. And then you have a much more reliable and high probability trade than trading something completely different, completely out there. So you want to be managing this right. You want to be able to scale into trades because then you have less things to look at, less instruments when you watch this, and it's just easier to follow everything and keep track of everything at the same time. Okay, I know you want to see the chart, but before we get there, just one more thing I want to tell you. It's the fact that I think most people are using take profits wrong. And what I mean by this is that they look at take profit as a way to get out of the market at a certain level, like a reward to risk, like a 2-to-1 or 1-to-1. And that's all good. It all makes sense on paper. It's a very clever strategy. Then some people are going to go and they will decide to take profit when the market pull back. Like it goes and makes it high, pulls back. Okay, it's getting close to break even. They're going to get out and look in the profit there. Again, not a bad idea. It makes sense. But really the key thing here, if you want to make this more reliable and paying you overall better, is to take profit at market highs. You take profit when the market is like crushing it. It's like outperforming the average range in the market. So it's like really going beyond in profit. You don't force yourself to aim for reward to risk. That's a little bit more out there. When the market does a big push, you take some profit off, not all of it, but partially. And then you let price maybe come down a little bit more. Then you let price ride more up. Then you let price go back up even more. Then you take some profit again. And as you do this, you really take these profits at market highs when your trade is really outperforming, as opposed to when it's like a certain reward to risk, or when it's pulling back, or when it's like failing to make a new high. These things are working well, they're decent, but they won't give you the big edge of catching these higher moves in the market. Okay, I'm not promising some trades. We'll get right there in a second. But if you don't want to miss out on my free Bonjour Universal Strategy course, I go through all the rules of my strategy. We'll go on the charting details. But if you want to learn the rules and understand it better and not miss out on any small rules I have, then check out this course. It's going to be linked below. It's 100% free. There's no add-on to it. You can just kind of follow the rules, use the basic Bonjour indicator on your chart on any platform. They work totally fine. And you get to trade exactly like me. And you see the exact setup I see in my chart at the same time. So grab this and come back to the video and we'll jump right into the chart. All right, so I do want to show you a trade example here on Netflix on how this really all works out together. Netflix is a good trade I had in the past year. Now we'll go here. This is a daily chart, but I want to take a step back and show you on the weekly chart first, because it's really where the strategy shines. And really what we have over here is we have two different strategies working at the same time. So a reversal one and then a trending one that will add more trades as we come in and move forward. So what I want to show you first is this one over here, which is a setup of the Bonjour Universal. The course that I have is going to go and teach you all this in details. But basically what we have here is we have a trend. The longer term trend I have from the hull at the bottom of the chart here is a bullish trend. Right? But this is a reversal strategy, so we need to be able to trade this against the trend a little bit. What we see is we have, this is a short-term hold on the chart. I have the green candlestick highlighted as the short-term trend. It turns green, then it goes to red over here. That means that we are actually going to turn into a bearish trend, which is good for our style. It means even if we are for a very short time in a bearish trend, it's good for us to go and take the reversal of this. Longer term trend is still bullish. We still want price to go back up. What we have here is we have price that's coming below the Bollinger Band. You can see the lower band is over here. Price goes below, pushes below. Then we have another candle after that is engulfing this candlestick before. So engulfings for me are very strong. They're one of my main setup that I look for in all the strategies I have. They're a really good standard reversal, one of the best ones out there. When you look at the market, you want to see where price reverse. They need to be added with something else in context, but they work really well. The way I do it is I then enter above the high, put entry order above the high. Stop loss is going to be below the low on this strategy. And compared to what I did before, is I don't have any take profit on this. I just let this run. So I let this run until two things happen. One is we have a full kind of reversal where I get out of the market. But two is I coded a indicator that really helps me to get out on time and at market highs. And these are the dots that you see over here. These dots, they calculate the distance between the price and the moving average, right? So here we are, let's say over here, we are just here. It's not a big difference. It's very close. We go to here, small difference, a bit better, but not that big. But then compared to over here, you see the price push up right above. It also coincides with the upper band of the Bollinger Band, pushes above it. That's a big difference. Like that's really far from the middle band, which is the moving average. As we continue here, we have 1, 2, 3, 4 of these dots. These are kind of far from the price, right? So whenever I have 2 or 3 dots, I'll take some partial profits. It could be 2 dots, could be 3 dots. It's a bit discretionary here, but it's very actually systematic. So usually 2 dots, take some profits. And then not fully, but partially. And let price go more in my favor after that. Then we continue. And you can see price goes up. And now the cool thing is that we have this strategy, which is working on reversals. We have another one that works on trending markets. So over here, you can just let this ride until the trend stops being green. It's always green. You can see over here. When this trend stops, we can get out. But that's going to be like a long time, especially on Netflix here. We're still green. We'll still be in that trade. What I do is I combine this with a more, still easy, still very hands-off on a daily chart strategy. And I use my whole moving average. We can see this on the chart here, the whole HULL or HMA, to give you an idea of when to get in on pullbacks. So these are the setups that are highlighted in the chart here. So you can see we have a one over here that's impossible to take because price just gapped up after really quick. So we will forget that. Then you have one over here where price went a little bit above it, which is good for us. We want to enter above the high of the setup. Stop loss can be below the low over here. And these trades, they don't have any take profit either. They're just right. Because they're right until we have a partial profit trigger, like this one over here, or until the hull turns red. The short-term hull. Right? This is a long-term hull. This is a short-term hull. So here we go in, one trade. If we want, we can add more here if we really wanted to. Whenever this one is in profit, I'll add to a second one. This one I won't add because this one here is in the profit, but this one will be in the loss. Here, the same thing. So we continue. Then hull turns red. Boom, get out. Okay. Small profit. Maybe a small break even over here. That's fine. Then the hull turns back to green shortly, then red again. We let this pull back. We're good with that. That's fine. Wait for the next trigger. Over here. Boom. Entry above the high. Stop loss below this over here to be safe. This is stock. It's a bit more risky than Forex. There's a bit more gaps. So stops need to be a bit more far. Price goes up. If you wanted to, we could really be adding more here. Not over here because the trade will be in the loss or break even. Then okay, the hull turns red. Boom, over here. Small loss, small profit here. Continue. As we gather these, we can rebuild a big position. Like some will last longer, some will be shorter, of course. These are pretty short pullbacks. But some will really give you big profit, like maybe this one over here. We have a entry. Again, price went above the high. Stop loss will be maybe somewhere below here. We let this ride. We have one here that was not triggered as an entry because price didn't go below the high. I teach all this in the course, by the way. You can check it out below. Then we go up, come back down. Okay, we have another one over here, which we could add. Now, price very momentarily here go red, which could be a sign to exit. You could exit here if you wanted to. You have a small win and maybe a small loss over here. And we continue. Now, keep in mind, as we have this going on here, we have a trade on the weekly chart that's going up and up and up. And we can add more to the weekly chart too at the same time. Then we have price here pulling up. These are exit signals or partial exit signals. We don't have any trade going on this time frame right now at the moment. We could have if we didn't have this like small crash here. But that's fine. And we continue. Doesn't trigger here. Price comes back down. Okay, gap above, and so on and so on. Here we have a nice reversal setup, which is the Bollinger Band reversal setup, which we talked about before. So price breaks the Bollinger Band. I'll just add this in the chart here quickly to show you in details. Price breaks the Bollinger Band, goes back within the bands, entry above the high, boom, triggered. Stop loss will be below or low right over here. And we can get out at partial exits when we have one over here. Okay, we get out partially. And whenever the long-term hull here turns red, which would be right around the same time. So we're good in this. And that's kind of how this works out. You can see really we can add both styles together. We have again an entry here. And we'll go through all of these. There's many of them. And then we can really let this ride until the hull turns red. And so on and so on. And we have a good chance of having really good moves in this kind of market. So the key thing here is you pick a few instruments you like. You kind of add more as you go forward. And yeah, things work out in your favor really well that way. So I'm not sure what examples of this, but we're getting long with this video here. So I want to keep it to a very short time, usually around 10 minutes, 15 minutes is good. But if you want to see more examples, make sure you comment below. Tell me you want some more examples. I'll do a whole video going more in details on these. I can even do a live kind of trading session where I go and take these trades. I've said in the past, the views are never really high on this, so people might not want to watch it too much, but if you want to see it, make sure you comment below and I'll do one of these. If you want to get my free course, again, it's going to be linked below the very first link to go through this strategy and you can learn all the rules and details. I hide nothing from it. Everything is there. All the rules are in place. You can just copy it and use it for your own. I really want to be able to get you results and it matters a lot to me. So comment, get the free course, and I'll catch you back here in the next video pretty soon. Ciao.